us lies the monetization of the payments from the COVID cycle. You saw this year in the bond market when they started to try and issue new bonds to pay for some of the interest payments. The bond market freaked out. It's because there's too much debt. And you have to issue an extraordinary amount of bonds. When your interest payments have gone up from, let's say, 1% to 5%, they can't do it. The numbers don't add up. And so something has to change. That something, I think, is they have to bring rates lower, and then eventually they will have to use the balance sheet. And being late in cutting rates is their way to ensure inflation undershoots their target. And I've shown that seems like it's pretty much baked in the cake. And that'll give them the cover that they need to relaunch QE. Whether they do it in the same format or a different format, who knows? But somehow, somebody's got to pay those debts, and there's no way the market can absorb it. All central bank balance sheets have all just been the payment of interest from the previous cycle, or the break, sorry. That's the power of a secular trend. It outperforms any other trend, and it's more calibrated to financial conditions. It's more juiced by the business cycle than anything else. These are the things that matter to me. And there's two massive secular trends that dwarf all others. Crypto. Here's the chart, the long-term chart of Bitcoin since 2013. Some people use this chart longer term. I used to. But the early cycle was so kind of ridiculous that it screws up the chart. Other than that, it's actually a perfect log trend. And as you know, we think the business cycle peaks sometime in end of 2025. And that would suggest a crazy sort of target that could get somewhere between $500,000 and $1 million in Bitcoin. Do I expect that? Probably not. But who the hell knows, right? These cycles can be crazy. And this one feels more like the 2016, 17 cycle than it does the prior cycle. And that cycle didn't have a lot of central bank printing that eats all other equity sectors alive. There is no point owning other stocks. Every other bet is suboptimal in this world where everything is correlated. So if you're going to take bets, buy the NASDAQ. If you want to outperform the NASDAQ, buy the semis. If you want to outperform the semis, buy the exponential age basket. Simple as that. Crypto. So, sorry, to go back to the NASDAQ S&P chart, it's outperformed the S&P since 1990 by about 5% a year. That's including the crash. If you go on the recent trend, it's about 13% a year. It absolutely crushes the S&P, the Russell 2000, cyclical stocks, commodity producers, commodities themselves, all of it. So it's a really simple thing. You don't have to do a lot. You can be the moron on the left of the bell curve or the genius on the right. Just don't be in the middle of the bell curve. Don't be the midwit. Just keep it simple, stupid. Technology going up. The world is getting more digital. When we look at the Bitcoin chart versus the S&P, there's plenty of upside to come. Of course, there'll be ups and downs. But in end of 2025, you'll look back and you'll have come a long way. And that is a great trade. With Bitcoin, it gets even more interesting. You see, that gives us a kind of extraordinary set of numbers, which make me think that these are overstating it. So I'm just going to assume that we'd halve these. Maybe they're right. I don't know. We'll have to see. The Everything Code is new. You know, yes, it's worked in the past, but who knows? Because it gives us crazy numbers like 218,000 by May. That's post-halving, post-ETF. It would give you a target of $500,000 by 2026, which is in line with the log trend. So it's possible. Doesn't feel like the most probable outcome. Feels a bit ludicrous to me. But anyway, directionally, half the numbers. Assume Raoul is a total moron, which certainly my wife would do. Then you still get great numbers. So it's all to play for. And that makes me interested. Now, Bitcoin's actually not the horse I'm going to back in this race. I'll come on to that in a sec. Also follows M2. So when liquidity conditions are rising, crypto outperforms tech stocks. And that's because of the structure and incentive systems built into a tokenized ecosystem, where you're owning part of the underlying network and you get paid for the adoption of the network. Some equities can look like Bitcoin. We've seen Nvidia, for example, see network adoption at scale, and it ends up looking a lot like Bitcoin. But the index as a whole, it will always underperform. So that's why I'm so heavily weighted in the crypto space. Beautiful chart here, Fed net liquidity and Ethereum. Bitcoin has actually outperformed Fed net liquidity, the beach ball underwater. Why? Because of the narrative around the ETF. Also, in macro crypto spring, Bitcoin always outperforms. Much like in macro spring, treasuries tend to outperform credit. Later, when we move to macro summer, alts, ETH first, Solana, others will start to massively outperform Bitcoin, then corrected. Then we had COVID, which we're not going to repeat. I know many people are expecting, we're going to get a 50% collapse and you buy that one. It's not going to happen. Of course, you'll get corrections. I think they're most likely more sideways, give or take a 20 to 30% range, because that's the world we live in crypto. But we should keep going into the end of 2025 if we're just repeating the same old cycle, which I think we are, because the Bitcoin halving cycle is the same as the election cycle, is the same as the everything code, global debt refi cycle. They're all the same thing. So I don't see any reason why it won't play out that way, and that's what I'm expecting. So good times lie ahead. Some people don't use the straight linear log regression. They use a curved version, log regression bands. I don't really like these. I think people use them because they explain the early price action, because it was so steep, it kind of screws up log regression charts, which is why I started mine in 2013. I think, like the NASDAQ, it'll stay within its log regression. This would be the less optimistic version, and that would tell us that somewhere, probably if we extend it out to the end of 2025, we'll get to 100,000 in Bitcoin. So that would be the least bullish case. The other bullish case would be the straightforward regression that can get you to $1 million. The everything code gets you at $500,000. Hold your trade, add on sell-offs, anything over 20%, add into it, and just calmly let it play out. Don't overtrade. Don't try and pick tops. Buy in, buy out. You'll miss it. I've seen everybody do it. I've done it myself. Just stick with the program. Keep your cool head. Hold it. Store it on your ledger. Don't let your exchange blow up and take it away from you. Don't do bloody DeFi farming, because something else can take your coins away. Your job is to not part with your coins until 2025, particularly towards the end of 2025. That's your one job. So anyway, you've got the brief. Hopefully you'll remember, again, repeating the words, not to fuck this up. Okay, finally. One thing at Global Macro Investor that we talked about 3-4 months ago is we said we think Q4 was going to be something that is bananas. As the spigots to liquidity start to open, it should cause a kind of dramatic increase in prices. Part of that is the seasonality of the S&P 500. Here it is. It's been a beautiful chart, and off we go to the races. We should finish the year strong. I think we finished the NASDAQ, S&P all-time highs.